Hi, it's Charlie giving you Wednesday's video. I hope you're very well. So, adding into winning trades, it's not for everyone. Now, someone asked me to if I would do something on this on the YouTube video on this topic, and the reason I say it's not for everyone is because if I actually bring the pen up here, and what tends to happen is you get into a trade, let's say here, and your stop loss is down here. So here's your stop loss, and here's your entry. Alrighty. Maybe you've got a target, maybe you don't use targets and you just trail your stops, whatever. So let's say your target price is up here somewhere. And so the market starts running in your favor to such an extent that you get to a point, whatever that point is, where you can move your stop up to break even. Okay. So now you're in what everyone calls in the game a risk-free trade. Now, at this point, it's actually very difficult. So let's say over here, this would be the point where you can now add into a trade. But psychologically, it's difficult. And that's why I'm saying it's not for everybody. Because you're just at this point where you're in this, relax. Whatever happens, it's only going to be a break-even trade now. And a lot of people feel that way towards trading. You know, they trade very emotionally. And so they're now feeling like, okay, I'm at break even. Nothing can, not only worst case scenario is it's a break-even trade. But what you're actually asking yourself to do is to then add new risk on at this point. So at the point that you move your stop up, you're saying, right, now I need to put. So if you risked, for argument's sake, as a cliche, 1% down here, you're now looking to add. Let's assume. It doesn't have to be, but let's say 1% again up here. So you've just got to that point where you've moved your stop to break even, and this is the point where you would then be looking to add in. Like I said, psychologically, that's actually quite difficult for a lot of people. They've got this massive relief that they've moved the stop to break even, and this is why I'm saying it's not for everybody, because for a lot of people, they would find it very difficult to now add a new position in, and effectively then if that came all the way back down to the stop on this position, then they still end up losing 1%, even though nothing on the original. So that's the difficulty. It's all about psychology. So don't just think, oh right, I want to add to winning trades because I've heard that's good. It's not that easy. It's because of the psychological side of it. So you really have to work on the psychological side of these things. You have to do a lot of visualization and projecting towards your target. And I'm not saying, like believing it's going to happen. What I mean is actually you have to visualize it not working out as well, so that you're okay with it if it does roll over and then stop you out, despite the fact if you hadn't have added in and it had just rolled over, you'd have just had a break-even trade. You've got to work through all of that and just keep repeating it in your mind on a daily or by every other day basis, so that you're accepting of whatever happens. Yes, if it goes up, what if it pulls back a bit and then goes up and then still goes up? You really need to visualize every potential scenario so that it just goes straight up to your target. Well, I wouldn't say it's easy, but it's an easier example. Why is that not easy? Because you might be tempted thinking, oh, surely it's not going to keep going in a straight line, maybe I'll bank it now. And that's the sort of mindset that can come in there when they're going straight up. But it could be that, it could be that it does a pullback and then meanders its way up to your target, and you've got to work and you've got to be mentally prepared for that, because if time goes on, time ends up eating into you psychologically, and that can be troublesome, because then you start to get impatient with it all and fearful because of how long it's taking, and also you need to work through what if it completely rolls over. So there's a lot going on in the mindset that you have to work through and keep reminding yourself of all these different eventualities and be accepting of it. So accept that, well, it might roll over and I end up making nothing, or actually losing. So that's the biggest part of adding into a trade. Okay, it's the psychological side. So you don't have to feel like you have to do it, and so don't feel like you have to do it. So let's put some levels on again. So that's our entry, that's our stop loss, and target up here. Okay, so the thing with so here's our entry here. So the thing with adding into trades, so let's say we've started off and it starts going up and it pulls back a little bit and it goes higher. There has to be a point where you know that you're going to be able to move your stop to break even. That's the point, or at least moving up somewhat. It doesn't have to be to break even. It could be that you've moved your stop up halfway, so you've reduced your risk by a half. That might even be a point where you can then add in. That's the first thing to consider when adding in. It's about reducing the risk on the original part, and that then is a stage when at least the door is open for you to be able to open a new trade. Now, technically, it doesn't. Everyone trades differently. Technically, so I can't say, "Oh, do it when it breaks at a certain level or whatever," because not everyone's a breakout trader. Everyone trades differently. So you know your technicals. But the point with adding into trades, as far as I'm concerned, is it has to be on one of those trades where you've got a target which is further away. There's enough space in here to be able to add in once, maybe twice, maybe more than that. But there has to be enough space in order for you to be able to do that. So otherwise, if your target price is right here, you can't really add in because your risk reward ends up being poor. So overall, it's not going to be on every trade anyway. When I look at my trades, it's a very small overall percentage of my trades that I get to add in on. Okay, because it's only a small overall percentage of my trades which have those really much bigger target prices. So consider trades where you've got a target price which is quite a good distance away, whatever that means to you, because everyone trades off different time frames and it's all relative to the size of your stop loss as well, of course, and effectively risk to reward. But so if your target price is a nice distance away, so for me, when I say a nice distance, if it was only 1 to 2 risk reward, then it's unlikely going to be far enough away at 1 to 2 to be able to, by the time I move the stop up to break even and stuff, to maybe I might be able to, but so it's more likely going to be on those 3R and plus type trades, potential trades, where I be able to have enough space to be able to say, right, okay, we've now moved up far enough. I've now moved my stop up to, let's, for argument's sake, say break even. And I'm now going to put a fresh position on with wherever the stop loss is on that, because we've now moved far enough away, and I can afford at least to do that. And that's what you do. And then again, the same thing happens here. So if we go higher on this point, and at the point where you can move the stop up on this position is where you can then potentially add another position over here. So it's simple in that regard. It's just a case of that's down to your style and how you approach the markets. People, they buy breakouts. So you could say, well, I'll buy when more when it breaks out. If it consolidates up here, let's say, and then it breaks out, right? Then I'll buy more over here. I'll add another position up here. So that could be one trader's approach, but it might not be another trader's approach. Another trader might say, actually, I'm going to buy the pullback. So I'll buy the pullback as it comes down, pop a stop loss down here, and I'll trade it that way. So everyone's going to do things differently technically, but overall it's the psychology of all of this which is the most important. Whether you can handle, just when you're getting to a point when you're in nice open profits, having to put fresh risk on, and can you deal with that? And because a lot of people say, actually, no, I can't. So don't feel like you have to add to winning trades. It's not something that the majority do. It's along that theme that I've talked about lately. Is the road less travelled. But for some people, it can be a really good way of on those trades that set up this way, can be a really nice way of extracting more R from your trade. What would otherwise have been a lovely trade anyway. And so for those people who don't want to add, you'd still get a lovely trade out of this anyway. But instead of it being, let's say, a 3R return, maybe it becomes something like a 6R return or a 9R return or something like that. I've had returns in the past year or so where I've had plus 30R returns effectively out of a single trade idea, which I've ended up running for several months. So but it takes a lot of work, takes a lot of psychology in order to, and mindset work in order to be able to do that. You don't have to. You can just move on to the next trade and move on to the next trade and move on to the next trade. It's just another concept that you can add on to your trading. Hopefully that gives you some food for thought for this Wednesday. Take care for now. I'll see you at the end of the week.